a lot of times AI doesn't have the insight that a lot of guys like me have because we have experience, right? We've seen these situations time and time again.
Yep.
It's becoming a super interesting dynamic, but a lot of times AI, yes, they're kind of looking at other people's opinions, but also too, they sometimes don't have the insight that you need to know for your business to grow of, hey, what things are coming up in the pipeline, what new rules are coming to play. So a lot of times that's another reason why you need a really good strategic advisor in your team.
Hey everybody, Zach at New 2 Media again, and I'm excited to have Devin Albert with us again. Devin is a tax strategist that we work with that works in Miami. I'm a little jealous, wish I was there today. How's it going today, Devin?
Going great, beautiful weather today. I'm super excited to do this.
Fantastic. Devin, one of the things that you and I were just talking about was the difference between filing a tax return and doing tax planning. And I said, I need a different way to describe that because I don't think some of the other people that I've talked to about that have given a really good analogy. How would you describe the difference between tax filing and tax planning?
Huge difference, right? Tax filing, you're looking in the rearview mirror. It's more reactive. But tax advisory, tax planning, that's looking forward and seeing what opportunities are there. It's kind of like driving a car, right? When you're driving a car, you're running your business, everything's going great. But the problem is if you have a reactive accountant who's handling all your taxes and accounting, they're looking in the rearview mirror. So by the time you come to them, you've already driven the whole way, or you've already driven a part of the way that you need to go. So if you have a proactive advisor, we're telling you, hey, watch out for that. You might want to turn a little bit more to the left or to the right. So you have a understanding of where you're going, what savings you could find, and making sure that you're making money, but making sure that you have that foundation set. Because if you don't have the foundation set for your business, you're just making money that could be given back to the IRS later on through penalties, interest, and fees, or doing something that wasn't allowed.
Exactly. That's a great way to describe it. And I think just as you're saying that, it reminded me that I had a situation a few years ago where I should have been talking to you because I thought I was going to qualify for a certain AI tax credit, an R&D tax credit. And I found out at the end of the year, after I had paid someone to do quite a bit of work for me, and they did great work, by the way, but the work that I had paid them to do, that tax credit didn't apply because they lived outside the US. So there are, had I talked to you at the beginning of the year or maybe the prior year, we could have maybe worked out the work being with a contractor so that I could have gotten that tax credit. You have to be proactive. You have to talk to someone like Devin before the tax year so that you can make sure you've got your ducks in a row.
Absolutely. Yeah, it's so true because you see these things and you're like, well, I don't really know. I mean, I'm assuming my accountant's handling that, right? Like, oh, they'll all the tax and everything like that. But you get to a level, after you kind of started your business, you ran it for a few years to where you realize, hey, I really need someone that's actually proactively reaching out to me, telling me insights that I need to know about my business as I grow it, right? Because usually it's the other way around. You just kind of the account comes to you at the end of the year. It's just very transactional, right? Once you get a certain level, after a few years in your business and you start making some real money, that's when you really need an advisor, somebody that's there helping you see the things that you should be seeing and giving you that really powerful insight to help you grow your business. So yeah, exactly. So they should have came to you at the beginning of the year, and maybe they did a good job with the books and all the reactive stuff. They were just doing their job, but the problem is that they weren't going a little bit above and beyond what they should be doing.
Exactly. And I know that you guys are going to be proactive and try to let the businesses know based on the business that they're in and based on the things that they do. Hey, you may be eligible to do this next year if you're doing this. You may be eligible to do this next year, but you've got to get it on the front end. You can't be looking in the rear view mirror hoping that you qualify for something. Or checking Google and thinking that you're going to qualify because you were told that it was going to work because of what you Googled.
That's so true, and I'll touch on that too because the AI is becoming such a powerful thing these days, right? A lot of people use it. People are
Yeah.
searching, "Hey, the best tax accountant in the area," right? The problem, AI gets fed a lot of information online, right? You're really just taking a bunch of people's opinions online, and you're just compiling it into one, and then that's what AI makes the recommendation of. I don't know about you, but most of the people on the internet, I don't believe what they say. you're taking a lot of people's opinions, putting it all together into one, and then having like, hey, this is what everyone kind of. It gets a little weird, right? So that's why
Yeah,
there's a level that AI has to like be able to prioritize, like who's good, who's proactive, who's not proactive, right? Because
right.
certain point, again, you need that advisor to help you grow. So, and a lot of times AI doesn't have the insight that a lot of guys like me have because we have experience, right? We've seen these situations time and time again. We understand what the IRS is coming after now. You see that the IRS is cutting a ton of jobs, tens of thousands of jobs right. And it goes to show you, like, how they're starting to use AI themselves on some of this stuff. So
Yep.
it's becoming a super interesting dynamic, but a lot of times AI, yes, they're kinda looking at other people's opinions, but also too, they sometimes don't have the insight that you need to know for your business to grow of, hey, what things are coming up in the pipeline, what new rules are coming to play. So a lot of times that's another reason why you need a really good strategic advisor on your team.
Absolutely. All right. We're going to share a couple of really cool examples now. Um,
Surely.
I know you had told me about a dental practice that you had had some amazing progress for. Tell the audience about this.
Yeah, so this was a dental practice that we helped them identify a significant amount of savings. And so basically what happened is that dentist came to us, good practice, good staff, and they had a good CPA that was working for them. But the problem is that their CPA was just reactive. They were just kind of doing the filings. Um, and they really needed somebody who was proactive. And so as he came to us because he kind of had these concerns too. And so he's like, "I think I should be, paying less in taxes. I feel like I'm paying a lot. I'm trying to grow my business and this tax burden's just holding us down. It's like this big weight." So we kind of looked over everything and we found that, hey, he was overpaying significantly, and through his benefits that he was paying through his employees. So we utilized a section of the code called Section 125 for a cafeteria plan. Basically, we reviewed what he was doing and found that he was overpaying significantly on his benefits. So basically what we did is we restructured everything. And over the years that he'd been in business, this one fix that we did for him saved him over $289,000.
That's
Never
9K.
have money that's back in the client's pocket, right? Because
Yep.
this is money that's going to help them with marketing, with hiring new dentists on their team. Like this is powerful stuff here. And in this dentist, he's really doing well. He's expanding. So, we're super excited to be a part of that success and be able to help with this. And I know he said even he wanted to use some of the money to help with his kids' college. So I thought that was funny.
That's correct.
Yeah.
That's great. Good,
It's important
good for
it's
you
important to
guys.
know. Thank you. Yeah, it's important to know that his CPA wasn't a bad CPA, right? It's not
Right.
like he was doing a terrible job. It's just that he was doing just the bare minimum for the clients, and that
He
works
was
maybe.
filing the returns.
Yeah, you're just filing the returns, and maybe that works at the beginning. You hire the cheapest accountant in town, sure, but the problem is you're just putting a Band-Aid on the solution. You're just putting a Band-Aid on it. At some point, that Band-Aid needs to be ripped off, and you really need, someone to go in there and actually fix the wound, right? So that's what we do. We make sure everything's compliant. We make sure everything's fixed. And we make sure you're taking advantage of every single opportunity, whether it's this Section 125 tax or tax savings, or whether it's the R&D tax credit that we're helping the client save with, right? It's helping them know what they qualify for and helping them take advantage of it successfully.
Outstanding. Um, you also mentioned a cleaning company that you had done some work for. Tell me about that.
Yeah, so this is a cleaning company based in Miami that we helped. They're a commercial cleaning company, family owned, run of the mill, nothing fancy, right? So as we're onboarding them, again, they kind of had the same concerns. I feel like I'm overpaying in taxes, don't, I just want a little bit of a second opinion, right? So after we're reviewing his prior returns, we kind of found something in his return that was really interesting, and it just kind of piqued my interest. And so I was looking at it. I saw it was a solar tax credit that was taken on his return, and like I know these clients because I'm always friends with all my clients. I get to know them very well. I, as I was kind of looking, I was thinking like, why solar tax? Like, I don't think these guys have any solars. So I
Yeah.
was thinking about it, and I saw on the return the address of what property this was, and I tried to look at what property that these guys had because I know all the properties that they own. They have a few real estate properties in their portfolio, and I saw that the address that was claimed was actually the address of the accountant's office themselves. That's completely wrong. That's not how it's
Right.
supposed to be, because it's supposed to be a tax credit for putting solar panels up on your roof, right? So
Right.
also your investment property. So that was the number one. I was like, something is wrong here for sure.
Yeah.
I checked with my CPA on my team and a few others, and I was definitely there's something wrong because I called up both of them and I asked them, the owners of the business, I asked them, I said, "Hey, do you guys own, like, any solar panels or anything like that on your roof, or do you have anything like this?" And they were like, "No, we don't have anything like that. What are you talking about?" And that's when I knew this was gonna be a major issue. This was significant. This was over $70,000 of credit that were claimed in this past tax year, which if you do something like this that you're not supposed to, when the IRS goes to audit you, you pay almost double the amount back in taxes, penalties,
Penalties, all that. Yep.
fees, and you gotta go through the audit and pay an expensive tax lawyer. So, you do not wanna go into something like that and mess up. So, we fixed this for him and saved him almost $140,000 in taxes saved for this client because of the fact that we found this and we fixed it for him.
Well, that is incredible. I mean, they obviously they they dodged a bullet there. So it's not always going to necessarily be a huge tax savings, but it's at least going to be, sometimes it's going to be avoiding a huge problem that you were going to have if you stuck with, you know, the way you were doing things.
Yeah, absolutely. Like, this was something that if we didn't catch, the IRS was 100% going to catch for them.
Yep.
So at the
Yep.
end of the day, it's either us or the IRS. So
Yep.
if IRS catches it, they're a lot less lenient about it. I'll tell you that.
Yep.
Because they put on a lot of penalties, interest fees, but also too, in a situation like this, where something was intentionally put on the return to hide taxes, which is what happened here. It
Yep.
was very intentional. It was very clear that the old CPA was trying to lower the tax bill in a way that was not allowed by doing this false credit. So in situations like this, the IRS will go ahead and include another 40% intentional misrepresentation penalty, meaning that times two multiplier now goes to an additional 40%. So
That
this
is
is from
that is no bueno.
yeah, no blame from 7,000 to 100
Yeah.
to significantly more. So this is why it really pays to have a
Yeah.
really good, reliable accountant on your team. Because if you
Absolutely.
don't, the clients had no idea. The clients had absolutely no idea that this was happening behind their backs.
Yeah.
But because every single year when you go to sign on your return, you're signing on the dotted line. You
Yeah.
are doing this and saying, "This is what I approve."
Yep.
These are the most dangerous things for business
Yeah.
owners.
You're accountable whether you know what's going on in that return or not. Okay. One other category is you also, well, you give a couple other examples, but you mentioned an auto dealer. Tell us
Yes.
about this auto dealer example.
Yeah, so this was kind of another situation where we found something in the returns that were already filed that we really needed to fix. So yeah, I'll tell you that. So basically what happened is that on the surface, everything looked great. Car company, they buy and sell cars. They do extremely well. They're making a lot of money. So they're doing great, right? Everything looks good. So as we start looking over the returns again, we kind of noticed that, he had a few years of really low taxes, just oddly low, right? For the amount of income that he was making, it seemed extremely low to pay almost nothing in taxes. Like, yes, we can lower your taxes, but once you get to a point where you're paying like almost nothing in taxes, the IRS and me might have some questions, right? We're gonna go and investigate that a little bit to see if everything was done the right way. Maybe it was, but most of the time we want to make sure we're doing all the stuff right. So we were looking at everything. We saw that the prior accountant who filed this return actually worked with the IRS, which funny enough, apparently he was the best accountant in town. So we heard from the client. And so as we were looking over everything, I noticed something kind of like the solar tax credit that was really interesting. So there was this adjustment made in the books that basically it was basically called an other adjustment on the books, which you probably have some questions. You see something like this books, the IRS is going to have those same questions. So as we were looking into it, we saw that this other adjustment was actually transactions that were lumped together It was just lazy accounting all thrown into this other bucket. And so what this means is that the accountant was able to hide income that should have been paid taxes on. So what that means is that this accountant was doing something sketchy. And so we immediately recognized this and talked to the client about this and told them that, hey, by them doing this, they were hiding income that you should have been paying taxes on legally. So you're legally avoiding taxes by doing this. Again, you're going to run into issues like the solar tax credit. So you really got to be super careful about this. And um, we immediately recognized it. We told the client, we highly advise you to fix this issue. And because of this, again, we saved the client over $340,000 savings for this. Yeah, and this goes to show you the importance of having a good account. A good account is gonna make you money back, right? It's like the other. If you use a cheap account, you're gonna get cheap results. If you use someone that's really worth their weight, they're gonna
And digs into things. Yeah.
exactly.
They'll dig into you dig into the past a little bit to make sure everything was done right, and you're proactive for the future so that the client can take advantage of things. Like we're saying, driving down the road before you hit that speed bump, before make that mistake that could cost you that tax benefit.
Exactly.
Those are great examples. I'm sorry, I didn't mean to cut you off.
No, no, it's true. I mean, every single year, those clients, they make money. You have to set aside money for taxes. And so this is why situations like this happen is because there's sketchy adjustments that happen because they don't want to tell the clients, hey, you owe money in taxes, right? They're trying to hide this stuff. So this is what we do. We are not afraid to tell the clients what they need to know because it's their business. They have the right to know this stuff. That's the most important part about being a good advisor, in my opinion. Telling the clients what they need to know and helping them see the things that they need to see ahead of time before it happens.
Yeah.
Because if you see a roadblock right in front of you and you're about to hit it and nobody tells you about this, that's a problem. That is as a business owner, you need to know everything about the business going on as much as you possibly can. And how are you supposed to do that when there's a million things that are pulling you in all directions?
Exactly. What way to get ahead of it before they have the accident.
Yeah,
Okay.
absolutely.
Well, those are great examples, Devin. I really appreciate you coming back to share a few more. We look forward to sharing more examples really soon.
Absolutely. Yeah, yeah, I'd love to tell you about a law firm that I helped one time too. That was it was kind of like a similar situation where they were kind of so I'll tell you next time.
Okay, we'll get on that one next time.
Yeah, absolutely. Thanks, Zach, for having me. I appreciate it.